Wall Street investors found an excuse for optimism on a Friday, so the benchmark stock indexes closed with the gains despite the stronger than expected non-farm payrolls. Moreover, the S&P 500 and the Nasdaq reached the highest levels since early 2023. This week is full of crucial events and economic reports. Markets are looking forward to the US inflation data, policy meetings of three major central banks, and above all else, updated forecasts. The S&P 500 is still 4% down from the record highs printed at the end of 2021. Still, the index has settled at elevated levels. On a Friday, the broad profile index closed the New York trade at 4,604 points. It was the highest level since March 2022. Futures on the US major stock indexes traded mainly in the red in the pre-market today. They slipped by 0.12 and 0.24%, signaling a gloomy opening. The S&P 500 is expected to trade in the intraday corridor between 4,584 and 4,615. If the peers insist on a decline, the index will retest 4,560. If the bulls hold the upper hand, the instrument will grow to 4,635. The U.S. Labor Department reported on Friday that the U.S. economy created 199,000 jobs in November, excluding farm employment. An analysis had projected employment growth to 180,000. The jobless rate fell to 3.7%. Average hourly earnings rose by 0.4% from a month ago. Thus, the labor market has been cooling down not as fast as anticipated. Still, traders welcomed the red-hot data. A decline in the unemployment rate mitigates any recession fears. Bearing in mind an increase in wages and income, the whole picture confirms the theory of a soft landing. Besides, another report released on Friday showed that consumption sector improved stronger than expected in December, having snapped a losing streak for 4 months in a row. All in all, the upbeat macroeconomic data and the optimism about the completion of the Fed's rate hikes paved the way for a steady rally on Wall Street since October. The S&P 500 index climbed by 0.21% last week. It notched a weekly gain for a six times straight, thus extending the longest series of weekly gains since November 2019. The Dow Jones closed the week with a 0.01% uptick, but Nasdaq added 0.69%. Futures on the stock indexes are trading sluggishly ahead of the busy week jam-packed with a high-impact events such as the policy meeting of the Federal Reserve and the US inflation data. These events will challenge investors' optimism about the soft landing in the US economy. Apart from an auction of debt securities held by the US Treasury on a Monday, the economic calendar is empty. Tomorrow, the market will get to know the US CPI report. Headline inflation is widely expected to remain flat in November. As for the Fed's meeting, the odds are that the regulator will maintain the status quo and will hardly make too hawkish statements. Markets have already priced in a pause in the Fed's rate increases that will be announced this week. The likelihood of a rate cut in March 2024 again slipped below 50%. In this context, the market will give priority to the Fed's revised forecast and forward guidance for the next year. As for corporate news today, Macy's shares jumped by 19.1% in the pre-market as a group of investors proposed to purchase the chain store for $5.8 billion. The currency market is also opening the week in a muted mode. The US dollar index is asserting its strength, enjoying the superiority over the euro and the pound sterling. The index USDX rose by 0.13% to open the New York session at 104.10. The instrument is likely to trade higher today, inside the intraday corridor between 103.90 and 104.20. The optimistic scenario suggests a climb to 104.5 points, but the pessimistic one is a drop to 103.70. The greenback picked up steam on the back of rising yields of the US Treasuries. The market boost is expected later this week. Major central banks are holding their final meetings of the year. All of them are likely to refrain from any changes in interest rates. Nevertheless, market participants will find an insight into the prospects of 2024. So traders will be alert to revised forecast of policymakers for 2023, including the so-called dot plots for interest rates. The economies of the European Union and the United Kingdom are now in worse conditions. If policymakers do not make surprise decisions, the US dollar has a fair chance of sustaining its dominance in the medium term. The Canadian dollar traded also sluggishly for the most part of the trading day. The USD/CAD pair opened the New York session at 1.3578 level. The intraday corridor is defined between 1.3540 and 1.3620. The loonie is not waiting for any impetus this week. So the Bank of Canada conducted its meeting last week, and the head of a central bank, Steve McClam, is going to make his comments at the end of this week. So the Canadian dollar is steady like oil prices, though the oil market is still expressing concern of excessive supply and lower energy demand next year. And the crypto market is trading actively, though with a downward trajectory. Popular digital assets are losing ground. Bitcoin tumbled by 4% by the opening bell to trade at $42,000. As for the intraday outlook, Bitcoin could develop correction, and the token is expected to trade in the intraday corridor between 41,750 and 42,450. If the price leaves the borders, it could either sink to $41,200 or rise to $42,800. Our video is over. Your feedback is appreciated. Subscribe to InstaForex TV channel and follow developments and trends on the financial markets. So good luck in your trading and see you online tomorrow.